Hey, what's up guys? My name's Daniel Lopez with Invest in You Finance, and today we're going to be talking about taxes and why it's important to understand how to calculate your taxes working at your corporate job. Now, I'm not saying to crank them out, draw everything up by hand. I'm saying let's go online and look for a calculator to give us an estimation of how much taxes we're going to be paying every year. Whenever you want to become financially independent, it's very important to understand how taxes work. It's not an exciting topic to talk about, but I really like taxes because by understanding how taxes work, you can understand what things you can do to reduce your taxable income and keep more money inside your pockets. This is why it's very important to understand the US tax system. The US tax system is a progressive tax system. And the easiest way to explain that is by showing a chart and how much money you will pay in each tax bracket. So I'll show that here shortly, but let me just explain it to you real quick of how taxes do not work. Let's pretend you make $100,000. and you are in the 24% tax bracket. People think that because they make $100,000, they are in the 24% tax bracket and they're gonna be charged $24,000 in taxes. That's simply not the case. That is not how taxes work. So sit back, relax. I'm gonna show you guys a chart on how taxes work, and then we're gonna go through an example of how much someone making $100,000 will pay in taxes. And then we'll do an example of someone who's making $50,000, how much they will pay in taxes. Ultimately, guys, I want you to learn how the tax system works and what you can do to benefit the most by keeping money inside your pocket, inside your retirement account, inside your HSA, because once you become financially independent, your taxes totally change. When I was working at my corporate job, I received a W-2, and that W-2 told me this is how much your taxable income is, and this is what your gross income is. Your gross income is just your salary. And remember, whenever you file your taxes, you can choose to itemize your taxes or choose the standard deduction. In this example that I'm going to show you guys, we're going to choose the standard deduction. And I believe the standard deduction is $12,500. This number is the number you will reduce your taxable income by to figure out how much taxes you will be paying that year. For example, let's say that you make $100,000, you contribute $10,000 to your 401k, and you contribute $3,000 to your health savings account. That means that that amount is deducted from your gross income. So now your taxable income will be 10 plus 3, that's 13. So you'll subtract 13,000 from the $100,000, and that'll be your taxable income. $87,000. You will be taxed $87,000 minus the $12,500. And that will be the amount of money you pay taxes on. So that's why it's important to learn how to calculate taxes and figure out how much money you are leaving on the table by not maximizing your deductions. If you work at a corporate job, you are limited on the deductions that you can do. That's why I say if you work for your corporate job and you're getting a W-2 form, you can reduce your taxes by contributing to your 401k and contributing to your health savings account. Those are just two ways right off the top of my head of reducing your taxes. And in the example, I'll show you guys this. So keep in mind, this is just one of the tools you need in order to become financially independent. There's also a website that will show you what your paycheck will be if you contribute to your 401k And if you contribute to your health savings account, you can add the deductions and figure out exactly what your paycheck will be. And this is important whenever you want to budget, so that way you know what your take-home pay will be after contributing X amount of dollars to those accounts. Remember, your taxes will be reduced, so your paycheck will also be reduced, but you will be shifting the money that you pay to your 401k, to your HSA. You won't be paying that money to taxes. And this is just a strategy to keep more money in your pocket. I liked to calculate what I was going to be paying in taxes so I knew how to maximize the amount of money that I was going to keep for myself. Then I knew, okay, this is how much I'm going to pay in taxes. And just knowing how to calculate your taxes is just, I think, is a cool exercise, especially if you want to become financially independent. Okay, guys, let's get into the video. I'm going to show you guys the tax bracket and how much you have to pay in taxes. But then I'm going to show you guys a website on how to calculate your taxes, and it'll just basically estimate your taxes for you. Okay, guys, let's roll the video and check it out. Okay, here are the tax brackets. If you look at the first row is the taxable income. The second row is the tax that is due. So if you look at the first column, $0 to $9,950, you will owe 10%. 10% is $995. If your income falls between $9,951 up to $40,525, you will owe the initial 10% on $9,950, plus you will be charged 12% over the $9,950 amount, up to $40,525. This continues. If you go down to the third column and you make between $40,526 up to $86,375, you will owe $4,664 if you made $40,526. Anything above that amount, you will be paying 22% of the amount over $40,525. And this continues over and over and over, all the way down. Okay, here's a website. It's H&R Block. And basically you just start filling it out. So for this example, we're going to say we're single and we're not head of household. And then you're going to put in your age. And then if you received any stimulus payments, for this example, we're going to say we did not. And we're going to say that we did not have our W-2 form. And like I said, we're going to say that we made $100,000. And for the example, we're going to pretend like they didn't take out any taxes. And that's why you see it say that you're going to owe $15,000. And we're not going to put any other deductions or expenses. We're just going to see how much we owe on $100,000. Like I said, you're going to get the $100,000 and subtract the standard deduction of $12,400. So your taxable income will be $87,600. And you will owe $15,104 in federal taxes. And this is why it's important to figure out how to reduce your taxable income. This is for someone who didn't contribute to their 401k and did not contribute to a health savings account. Now let's go back and put as if we did contribute to a 401k. Let's pretend that we maxed it out at 19,500. Our income will now be 80,500, because remember, on your W-2 form, it'll say what your gross amount of money you made was minus your expense, which in this case, your 401k is an expense that is tax deductible. Now we can see that our income has been reduced because we have invested in ourselves and put money aside in our retirement. So now that our income is $80,000 and 500, they're going to reduce that income by the standard deduction of 12,400. Well, because our income is lower than $75,000 for someone who's single, you are now going to get a recovery rebate credit, which in the example is $1,250. So the amount of money that you will now owe will be $9,522. So just by contributing to your 401k, your retirement account, you were able to reduce your taxes by $5,000. And you now have money in your retirement account. Now let's say that you went the extra step and contributed to a health savings account. Let's say that you put in $3,000 in your health savings account. Now your taxable income is going to be $77,500. And it will lower your taxes about $1,000. So now you have money inside of your retirement account, and now you have money inside your health savings account. And you have paid less taxes. So you almost reduced them by 50%. And remember, you invested in yourself by contributing to your 401k and contributing to your health savings account. So this is the amount of money that you will owe the government at the end of the year. But typically, when you work at your corporate job, they take this money out every paycheck. But I just want you guys to see how to calculate it, so that way you can say, okay, I'm able to keep the most amount of money in my pocket by doing these expenses. Now let's pretend that we make $50,000 and we have no deductions, no contributions, nothing. This is just $50,000 and we have not saved for retirement or anything. Well, like in the previous example, you are going to subtract the standard deduction of $12,400 and you will owe taxes on $37,600. For the total year, you will owe $2,515 in federal taxes. Because you make less than $75,000, you will receive a tax credit of $1,800. Now let's go and change the amount as if we contributed the maximum amount to our 401k. Now I know it's tough because you might only be making $50,000, but let's say you lived with your parents and it was your first job out of college and you were able to save on rent and things like that, and you continue to live a lifestyle before when you weren't receiving that much money. Well, if you contributed the maximum amount, you're gonna owe taxes on $30,500. Then you're going to subtract the standard deduction of $12,400, and your taxable income will be $18,100. You will now owe $175 in federal taxes. So you save a little over $2,000. because someone who makes $50,000 is in a lower tax bracket than someone who makes $100,000. The amount of money they have to pay will be a lot less. That's why if you make six figures, you need to figure out how to reduce your taxes in order to keep money in your pocket. Now let's pretend this person contributes $3,000 to a health savings account. Their income will be reduced by $3,000. Now they will pay taxes on $27,500. You're going to subtract the standard deduction of $12,400, and the taxable income will now be $15,100. And you will receive a refund for $185 because you invested in your 401k, because you invested in your health savings account. You are reducing your taxable income. Therefore, the amount of money that you pay taxes on is less. So in this particular case, it looks like you might get a refund of $185. Okay, guys, now that we know how taxes work, now you can see and calculate how to maximize the amount of money that you keep from your corporate job. You guys work so hard for that money. I worked so hard for that money. I wanted to know how I can keep that money that I've worked so hard for in my pocket. Because knowing about money, knowing about taxes, all these are very important tools when becoming financially independent. And this stuff, it really gets me excited. Just knowing how to do this, I think is pretty cool. Do it for yourself. See what numbers you come up with. Leave some comments below. Smash that like button. Subscribe. Guys, I have so many videos out there on how to reduce your taxable income by contributing to your 401k, how to reduce your taxable income by contributing to your health savings account. I talk about expense ratios. I show how much I have inside my 401k. So go check those videos out, guys. They have a lot of valuable information that can help you on your financial journey. And that's why I'm here, guys. I want to help you guys out. I want to help you grow. I want to answer questions. Remember, I've done this. These are things that I've done, and I just want to share with you guys my experience, and I hope that I can help you guys out. This channel was created because I think that a lot of people do not know about these topics and are curious about them. So I want to show you guys what I've done, what's helped me, and hopefully it can help you guys out as well. Remember, guys, I'm not a professional tax consultant. I'm not a professional financial advisor. Please consult with your professionals. This video is for entertainment purposes only. But I want to thank you guys so much for checking out this video. Please like and subscribe. I'll catch you on the next video, and I hope and I wish you guys the best in your financial journey. Take care. See you next time.